Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for February 19th, 2016. I am Frank Ochoa, aka PivotBoss, with analysis for the current session. Here is a daily time frame of the ES. Obviously, we had the rejection off of the lower part of the key range between 1804 and 1811. That helped us identify that we could be looking at a reversal back toward 1921 and perhaps into 1939 to 1950 half. And we've seen a nice completion of that move into 21. We saw almost a push into 39s, and now we're seeing a little bit of chop back and forth. Overall, the expectation was for a move to the primary target of 21s, and then once we got to that zone, somewhere between 21 and 50, we could begin to see some type of weakness or rejection. Very similar to what we saw before. If we see that weakness or rejection turn into the market, we could be looking at a return back toward recent lows between 1804 and 1811s. As it currently stands right now, bears are defending 1921 from above, which what we're seeing is lower highs day over day now and lower lows over the last couple of sessions, and that could open up a return back toward the previous week's high price of 1884. If we drop down into the intraday time frame right now, what you see is price being offered and defended off of 5-day VPOC. That's 1922.75, and that's very important here. You can see it was VPOC throughout the previous session. Price chopped around it and then took it offered here and was defended the rest of the session. This morning pre-market, price got into 5-day VPOC three times, and was defended each time, which led to a rotation back downward. Now this is important because 5-day VPOC here at 1922.75 going offered at that level implies a move into the bottom of 5-day value, which doesn't come into play until way down here. So if price is being defended off of value on a 5-day basis up here, the expectation would be for price to roll back to below value over the coming day or two. So right now, if price can't hold above 1912 in the short term or 1914 on a pullback retest, this could offer an opportunity to sell into 1892, the primary bear target, with a shot at seeing the bottom of value at 1889. Above 1922.75 would be significant because all prices above that zone have been rejected thus far. So right now you can see how that area is being kind of developed and built out almost like a volume ledge here. Not much acceptance above 25s. So any return to that zone should still be continued to be defended by bears for a rotation lower. Above 25 would squeeze into 39 and 50 half. All right, taking a look at crude oil. Here's crude oil on the daily time frame. We've been trending lower. Obviously, we've had the pivot-based EMAs up. These PIMAs right here show a downward trending market. All pullbacks between the first two PIMAs are a trigger zone to sell. And what we've noticed over the last couple of sessions is a rejection the first day, a minor rejection the second day without getting paid, and then another rejection here the third day. So 3 times price tested the trigger zone, and 3 times it closed back below the slow moving average. So, or the fastest moving average. Again, if price finds resistance in this zone, especially at the HVN at 33.65, going offered and rejecting that HVN would imply another downward price discovery phase to new lows. So right now, this is very important. If price can't get back above 33.65, the implication would be a return to 29.88 with a shot at new lows. Price has to get above that 33.65 and see acceptance in order to reclaim or retest the midpoint of the key range at 35.75. So very important how this thing plays out on a swing basis here. And if you look at the intraday time frame for crude oil, you can see how price has been taking 5-day VPOC offered. Very similar to the ES here. We saw price push above the previous week's high, 33.70, and then fail to hold. This lower high led to a break. A retest here led to an opportunity to retest and continue. And ever since then, price then took 5-day VPOC offered at 32.97 here, and also here on a defense with new lows. So the expectation would be for a continuation after rejecting value at 32.97 for price to continue into the bottom of 5-day value at 31.61. And pushing into that zone would also likely lead to a test of the primary bear target for the day at 31.34. So easily, if price takes this zone offered, the expectation would be for a trickle down into this zone right here. Once price gets to that area, it could be defended by bulls for a return back to 32.97. Otherwise, more weakness could be seen. So right now, short-term weakness rotations to be defended for a continuation downward into this area. Above 32.97 opens the door to a retest back toward 33.70 right now. Let's take a look here at the gold futures contract. Obviously, we got a big time squeeze out of that saucer pattern here where we saw a big move up. We saw the blow off top. That implied a likely return to 1200 to 1192. We got that. And then once this formed here, this 2-day pattern right here, I talked about this being the extreme reversal pattern now, implying a squeeze back toward 1239 and perhaps 1263. And we got that in one session here. Then I mentioned any pullback into 1215 to 1220 should be defended. You can see right here 1220 coming very close to that zone, defending on the low. That could lead to a further on push into 1263 to further define this trading range that could emerge. So overall, continued strength to the upside short term. Bulls want to keep 1192 defended. Otherwise, failure to hold 92s opens up a return to previous composite VPOC at 1126.10. On an intraday basis, what we were looking at for gold was how price was going to respond out of this tightly coiled pattern right here. And I mentioned before that this pattern, the way it was being created, implied an upward squeeze. That's why we were watching 1215s here. Above 1215 squeezes, below 1200 slams. It broke to the upside and it continued higher very nicely. The first pullback has also been defended, which implies another push. Again, likely back toward recent weekly highs at 1263.90. So we could be looking at a continuation to the upside into this zone. Failure to hold 1220 opens up a return at 1200. Lastly, let's take a look at the NQ here. The NQ with a solid squeeze and a nice return after rejecting lows. We talked about this tail right here being a big time rejection tail below 38.93 half, the previous key range low there. That's the August range. Rejecting prices below that level implied a return to 42.26. That's what we talked about. And then 1, 2, 3, 4, 5 days later, we see it test 42.26 perfectly and then come back off that level. So right now, we've been nailing the market with these key levels and how to identify the rejection at the edges and then return it back toward acceptance. So we've done that very nicely here. Now we have to see how price responds around these key levels in the short term here. This pullback in an uptrending market could offer an opportunity to buy for another swing move into recent highs at 43.09, but failure to hold above basically 42.26 would suggest a return to recent lows at 38.93 half. So we got to see how this continues to play out. You see there's an upper trend line here that's starting to form, and that could lead to another round of weakness. Again, 42.26 is going to be the important level. Above that level opens up a move into 43.09. Failure to get beyond that zone could lead to a move all the way back down. So we got to see how this thing plays out. As soon as we have the key levels in place, we'll let you know what's happening. Right now, it's wait and see. Looking at the NQ here on an intraday time frame, you can see 5-day VPOC being defended and offered also. Here it is, a nice downtrending market the previous session. Pullbacks have been defended at the pivot range and also at VPOC at 41.71, and that's created additional weakness. Now, if price is going to go offered at 5-day VPOC, the expectation would be for a rotation back into the bottom of value on a 5-day basis, and right now, 40.92 is the bottom of value. So going offered up here would suggest a return all the way down to here, and that would be return to previous 5-day VPOC at about 40.75. So if you're going offered here at 41.70, that implies a 100-point rotation into 40.70 back toward prior value. Above 41.71 opens up a retest of 4200 and 42.26. All right, that's it for now. Let's see how this thing plays out heading into the rest of the session. Good luck, trade well, and happy Friday.